each and every year moving forward.
Yeah, there's no mystery about this, which is what I love about studying demography. And Harry Dent got me into that in the 90s, and ever since I've been a real, student of that idea, even though some of his predictions have been a little off. So he's been on the show 11 times, and every time there's a bubble, but this time he's going to be right. I think we'll see. But what that does, what you just said, is that gives the bargaining power to the labor, not the capital, right?
The problem is that capital is going away at the same time. I certainly agree that the relationships are going to change. I think it's a little bit arrogant to think that I know exactly how. Yeah. But we're definitely entering a period of protracted and extended and increasing labor shortage. At the same time, we're entering into a period of protracted and extended and increasing capital shortage. Okay. And just to make it a little bit more fun, China's collapsing against this backdrop. So even if we decided we were fine with a completely globalized supply chain, we still need to double the size of the industrial plant in the next few years with less capital and with less labor. Okay, so less labor would be inflationary because that would push wages up generally. I would argue that at the moment, the labor disconnect is the single largest issue behind our inflation numbers right now. Okay, but tell me about less capital. I mean, I'm coming at it from kind of this angle that, capital doesn't really disappear. It changes hands and, you could argue it changes places, right? It might be in more, risk-on investments like the stock market, or it might be risk-off like bonds or, money markets, right? So what do you mean that the capital is drying up? Like, how explain that a little more? Well, the baby boomers are at the height of their earning experience. And as of the end of next year, this year, they won't be earning anymore. So the net inflows into the system from just normal demographic structure dry up considerably. The next generation down, Gen X, is very small. Yep. And even if we do succeed in having significant raises now in this labor inflationary environment, there aren't enough of us to generate nearly as much in total. So step one, we're losing volume. Step two, we're losing investment quality because in the flight from risk on to risk off, the capital becomes a lot less interesting. Sure, this is going to be broadly decent for people who want to be in the government and borrow because that's the T-bill. That's considered the ultimate gold standard. And to a degree, that helps with the mortgage market as well, because mortgage rates primarily draw their guidance from the 10-year as opposed to interest rate levels. After that, though, you're entirely dependent on capital flight from the rest of the world. Now, I think that'll be robust, but I also think that'll be wildly inconsistent depending on what's going on in the United States versus wherever else the capital might be. This is still the deepest, most liquid market in the world. It's denominated in the sole source of global store of value. It is the only meaningful method of exchange for international transport and trade. And the Japanese and the Europeans have basically signed on to a US dollar denominated system as part of the deal that generated the sanctions against the Russian central bank a couple of months ago. So if you're going to benefit from this in any way, the US dollar is the place to be, but you can't predict the inflows year on year of what's coming in from the European space or the Asian space. It will come when they're in trouble and we look good, and it will probably never go back. And so we know that the capital supply has to drop domestically, and we know we're going to get these bursts of capital from abroad. But planning on that, that takes a smarter brain than I have. So 15 years away, though, that capital starts to pass from baby boomers to millennials. Yes. What happens? And the millennials themselves will then be entering their late stage worker years. Well, they will gradually become the dominant capital providing class again. So for the United States, we have a pretty big needle to pass through here. And a roughly 10 to 20 years, it can be a little loosey-goosey based on what happens with the monetary system and the Fed in that time. But in that decade of time, the United States will go back to having what we would consider a more stable capital structure. And at the same time, when you get into the 2040s, the labor market will start reconstituting based on normal demographic factors, because the millennials' kids will then be entering the workforce. We'll be through this long winter of the Zoomers. But no one else gets to do that. Everyone else went through industrialization and urbanization either faster or more intensely than the United States did. A couple exceptions, but only a couple. And so for them, they're looking at labor market's getting smaller every year, and the capital supply getting smaller every year. And still, in this decade, their advanced worker cadre, that big, giant last generation, moves into retirement. So their need for government spending to keep those people alive skyrockets and never drops.
And that is very problematic for places like China, Japan, Russia, et cetera. Yeah, it's.
I don't think China's going to survive long enough to have to wrestle with that problem, but for Japan, certainly.
Yeah, I know. You know, that's interesting you say that, because I have never been one of these believers that China's taking over the world. I remember the kind of xenophobia that was going on with Japan was going to take over the world, and that never happened, clearly. You know, China's got 10 years. And then it all starts to really shift, as I see it.
I think it'll be over 10 years from now.
Yeah, you really
think we're going through the shift right now.
Tell me what you mean by that. I mean, is it going to be an overthrow? I know the Chinese Communist government is very sensitive to civil unrest, right? They have huge sensitivity to that over there, and as probably they should.
Because that's how they got into power, yes.
Yeah, so what happens with China? Like, how does that unfold?
We've got some mid and long-term trends, and then there's a couple of really acute ones that are going on right now. Let's first deal with the longer-term ones. Finance doesn't work in China the way it does here. The Chinese will throw a bottomless supply of capital against anything in order to make sure that people have jobs. It doesn't matter if there's a product on the back end, really, as long as the people are working. So everything that people say about the U.S. Fed is actually true to an order of magnitude higher in China. Yeah. So the U.S. dollar is the global currency. It's the medium of exchange. It's the store of value. It's the lubricant for the number one economy and 2/3 of the top 20. The yuan is used just in China. It's not internationally traded, and they regularly expand their money supply by 5 times as much as we do. And at most times in the last 10 years, the yuan supply has been twice that of the US dollar, even though it's just not exchanged at all. So their financial system is its own thing. And to think that this is going to continue in perpetuity is being really creative with your math. They get their energy from a continental way. They don't have a navy that's capable of making that far in force in order to secure their own supply lines. So China is the country most dependent upon the U.S. Navy to keep the lights on. In manufacturing, their demographics have aged so much already that China is no longer the low-cost producer for any manufactured product. There is not a product that the Chinese make that cannot be made in North America at a lower price point. Now, you have to build the industrial plant first. So I don't mean to suggest we can flip a switch and it's all here tomorrow. But it does mean that anytime there's a hiccup in the Chinese system for any reason and somebody relocates, they never go back. Because it's better with a shorter supply chain, with less energy, with less transport, with more efficient labor closer to home. There's not a sector where that doesn't work. And then in terms of industrial commodities, kind of an echo of what's going on with energy markets, they have to get it from half a world away. They can't go at it and get it themselves. They are completely dependent upon the globalized system as enforced by the American Navy. So any of these issues by themselves are country killers, independent of the demographic situation. And in the short term, I think we're seeing the whole system go belly up. I think it's safe to assume that most people have relatively formed opinions about whether the COVID vaccine is the way to go or natural immunity is the way to go. But I think if we're all really being honest with ourselves, we will admit that people on the other side of that divide have some relevant points that are worth discussing. And we certainly know that if you have both, you're in better shape. Neither of those are options in China. The Chinese vaccine doesn't work versus the Omicron variant, certainly not Omicron B. And because, in many ways, that the Chinese government was so successful at keeping COVID out these past 2 years, no one in China has natural immunity. So if they were to open up with Omicron B being the dominant strain, Omicron B is the most communicable virus we've ever faced, and it's the highest lethality rate of all of the COVID variants to date. If they just opened up, they'd have millions of deaths a month for at least 3 months. And in a one-man show government, that is how you bring the system down. So COVID lockdowns that